All right, let's get this thing started. Thank you for all attending today, everybody. This is Heartland Loan Features webinar for Heartland Reverse Mortgages. You may have noticed we have a new name change. We're now called Heartland Reverse Mortgages rather than Heartland Seniors Finance, and hope that just provides a level of simplicity with the product we provide. And yeah, and I hope it provides that simplicity for you when you are dealing with your customers as well. But anyway, my name is Brody. I'm the Business Development Manager for Heartland Seniors Finance, and Heartland Reverse Mortgages. And today we'll be discussing Heartland's loan features. In today's climate, especially with the recent inception of Best Interest Duty in January 2021, it is now more important than ever to ensure you understand the features of the products your panel of lenders may have. So today I'll be showing you the features of Heartland, of the Heartland Reverse Mortgage, and the additional flexibility we provide, which will hopefully allow you to meet your customers' needs effectively and allow them to live a more comfortable retirement. So let's get started. So this is the agenda today. I'll be running through just a quick introduction, and then we'll jump into the loan features, and that's more around the Heartland loan criteria, so minimum and maximum amount, looking at security, locations, etc. Look at the product flexibility, such as drawdown options and other types of options that we can provide for your customer, fees and charges, and then we'll run through a couple of scenarios which will hopefully help you understand our features a bit better, and then we'll run through with a few questions. So for any questions you guys have, please keep them relevant to the webinar subject today, and put them in the question box, and I'll be happy to answer them at the end of the webinar. All right. So Heartland's loan features. Here's just a brief, a fair scope of what we'll be speaking about today. We've got all the different types of criteria and options that we can provide. But here at Heartland, we understand that one senior will have their own individual needs that will largely differ to the next. And as a market-leading provider of reverse mortgages in Australia, we do offer a premium product. However, the Heartland Reverse Mortgage has been designed with a number of features and additional flexibility, so your clients' needs can be met, allowing them to live more comfortable retirement by tailoring our reverse mortgage to best suit their circumstances. Because at the end of the day, it's really all about the customer's individual and specific needs. With the diverse offering and features we provide, we hope that we can attend to these needs effectively. So I'll go and explain how we can use Heartland's loan to ensure you are working in the best interest of your client through utilizing the features that you see here. All right, so let's talk about the Heartland loan criteria. So first off, with the maximum loan to value ratio, or the LVR, and we have a max LVR of 45%, and you can see the table here. It goes up to 90 years old. We cap the LVR at 45%. But that means there's no maximum age, so we can go beyond that. We can go up to 105 years old if need be. It just means that the LVR will be 45%. Minimum age is 60 years old. So we have a fair spectrum of ages that we can attend to for our seniors. And just note that for an aged care loan, we do offer up to 50%. So we allow an additional 5% on the standard LVR for an aged care loan. I think it's also important to mention that if one borrower if we have a borrower who's over the age of 60, and then they also have a partner who's under the age of 60, but also over the age of 55, so between the ages of 55 and 59, we can consider on a case-by-case basis to lend to these two borrowers. In that case, we would be lending to them based on an LVR of the youngest age. So if they were 55 years old, then the LVR we would provide to them would be 10%. However, this is not a part of standalone criteria. Like I said, it's considered on a case-by-case basis, but I thought that would be important to mention and important for you to note down. Moving on. So for the minimum, carrying on with the Heartland loan criteria, the minimum loan amount that we provide is $5,000. The minimum loan amount that we can offer for a initial advance is $5,000, and this is lower than most providers on the market, especially the major providers. And we also have no limit on the maximum, so we actually offer the largest loan size in the market as well. There's no minimum drawdown required for the purpose of home care. And this is something I'll talk about later. It's another additional feature that we've added to our product, but we also have a minimum drawdown for a cash reserve or redraw of $2,500. I mentioned the maximum loan amount is unlimited, so that could be for large mortgages that need to be refinanced, or for paying for expensive aged care costs or home care. So for our security location, our scope is nationwide. We will consider locations all around Australia, and you may have come across a postcode lookup tool on our website. We class our postcodes with red, orange, or a red postcode location. That's just dependent. That just really signals our comfort in lending in those areas. Sometimes we do have red postcodes, but don't let that deter you from at least having a conversation with myself. If you do get a red postcode, I will be happy to put through a request through to credit and see if we have some comfort moving forward. Because when we assess our loans, we approach the assessment with a risk-based approach. So we may not lend the maximum LVR for a red postcode. However, we may be still happy to consider on a case-by-case basis. So like I said, don't be deterred by the red postcode. Have a conversation with myself, and we'll see if we can proceed from there. The minimum security value usually is $200,000. That's your standard. However, this can be dependent on the location. It may be higher in some areas, such as Sydney CBD. And the property size must be greater than 50 meters squared and less than 5 hectares. However, once again, if you do have a land size that's over 5 hectares, we may be able to look at it on a case-by-case basis, usually up to 10 hectares. So just make note of that as well. All right, let's jump into product flexibility. This is the good stuff, I think. So Heartland's reverse mortgage product has been designed, tailored, with the flexibility to ensure your client's diverse needs are met. And most importantly, we have drawdown options that can best suit your client's needs. So of course, we have the lump sum that's taken out at initial advance, but we do understand that interest compounds, and so we only draw down. We want our clients to ensure they only draw down what is required. So we are able to set up the loan to suit the needs of the borrower. So for example, you may be able to set a cash reserve so they're not paying for additional interest, but they can set up the loan now to pay for things later on. So for a regular advance, they can be up to 10 years. That's important because we can set the loan term for the regular advance for whatever term best suits your client. So it can be 3.5 years, 2.5 years, 4.7 years, 7 years. It's up to the client and however it best suits their needs. We have the one-off fee of $250 for the regular advance, and that's just one-off. It's set up at settlement, and there will be no ongoing fees. That is also set up on a monthly, quarterly, or annual payment. And then we have the cash reserve, which is basically like a line of credit. It's set up so customers can draw funds from the cash reserve whenever they like, and that's really for it could be for emergency expenses later on, or living expenses down the road. And basically, interest only accrues on that loan when those funds have been drawn. So the cash reserve can be set up, can be accessed at any time throughout the life of the loan. So we do not limit the duration of access to the cash reserve. And also, I think it's important to mention that the capitalizing interest will not limit the access to the cash reserve as well, which is the case for some other lenders. So I thought that's super important to mention. And then once again, that's a minimum drawdown of $2,500. Right, more on product flexibility. So here are some of the other features we have with our reverse mortgage. A really important one, I think, is the equity protection option. This is where your clients can protect a proportion of equity when it comes time to repay the loan. So we can protect up to 50% of the sale proceeds when it is time to repay that loan. So that means that say, for example, if the home was sold for $1 million, they will be guaranteed $500,000, regardless of the loan balance at the time. For equity protection option, we're happy to look at any percentage, 50 and under, so it could be 47%, 33%. It's up to the client, really. But it's important to mention that we will reduce the max lend by the percentage that is used for that protection option. So if they do want to take out a 50% equity protection option, that means the max lend will be reduced by 50%. For repayments, so for the reverse mortgage, obviously there is no requirement to make any kind of repayment on the loan during the lifetime of the loan. However, they can be made at any time. And they might want to do that because they want to save on interest costs. They may want to just pay down the interest each month, or just generally reduce the balance. So they basically don't pay as much interest. And because for these repayments, we also have a redraw facility set up, and that can be accessed for all new loans. Basically, all loans after 1st of April 2017 are able to access this redraw. If you guys do have some customers who have loans that were documented prior to 1st of April 2017, we will be happy to vary the loan to include the terms allowing a redraw. And then, of course, we have further advanced top-up, and that's where existing clients can take out additional funds if that's what they want to do. I mean, that is subject to application criteria, so a new assessment will be carried out and a new valuation will need to be completed. There's just a few Heartland protections and promises which I think will be really important for you all to. I think the Heartland's protection and promises they're a good start for how you can speak to your clients about Heartland's product. I think these protections and promises that are put in place are really important. They'll be able to provide a peace of mind and for your client. So for number one, we have the lifetime occupancy. Your clients will be guaranteed to stay within their homes throughout the lifetime of the loan. We'll never go and force them to leave, anything like that. They're in there for the entire time that they hold on to that loan. There are no ongoing loan repayments, as I just mentioned, and there is the no negative equity guarantee, which I think is really important. Basically, the no negative equity guarantee means that the loan proceeds can never exceed the sale. So the loan balance can never exceed the sale proceeds at time when the loan is required to be repaid. So that means that your clients, when they decide to sell their home, when the home is sold, the loan will be discharged. There'll be no leftover balance either for your client or, say, their estate. They can retain home ownership. We do not take any kind of form of ownership over a property when we provide the reverse mortgage to your clients. And it's just a standard first priority mortgage that we take over that property. And we also do have a 30-day cooling off period. The clients can repay the loan in that 30 days. There'll be no interest charges or valuation fees if it is paid in full. And of course, we require independent legal advice for all our loans, just providing that duty of care and making sure we're in line with NCCP regulation. So for a couple of the additional Heartland products we have, we have the secondary property loan. And for the secondary property loan, we can use security for holiday homes and investment properties. They can all be used as security, and this can be for any suitable loan purposes, just like the standard reverse mortgage. The only real difference is that we will apply a scaling, or we will make a reduction of 25% to the maximum LVR for a standard reverse mortgage. Please note as well that if your clients have a secondary property that was owned prior to the capital gains tax date, which was in September 1985, we will reduce that scaling to 10% from 25%. So that's just an important one to note. And then for aged care loan, for those clients who are moving into aged care, who may have plans to move into aged care, we offer the aged care loan. They may want to pay for the refundable accommodation deposit or the daily accommodation payment, or they may want to use it for other suitable purposes. Maybe they want to renovate their home. They want to try and retain the value in their home for maybe future sale, anything like that. And we do allow an extra 5% LVR, as I mentioned earlier. And it's just one additional feature we have recently added to the Heartland Reverse Mortgage, and it's all around home care. And this is a really important subject, as recent studies have shown that most seniors in Australia do prefer to age in place. And so we have now tailored our loan to suit the needs of the borrowers who may be wishing to do so. So for home care, there is no minimum drawdown required. So usually there was that $5,000 initial advance drawdown. Well, that won't be required. We'll waive that, and we can just set up a regular advance option, which can be used to basically supplement a pension and create an income stream to pay for those home care providers. And then we will also allow for the purpose of granny flat construction as well. So you might know that we don't usually allow for construction, especially structural construction on a property, on a security property, but we will allow for granny flat construction where, say, family members may be moving into the borrower's property to assist them for home care purposes. So I think that's really important. There's definitely a need for home care financing solutions out there. So we're here to assist. You might have some clients who will be moving into aged care, or may have plans to move into aged care, but they don't really want to leave their home. So this can be a good alternative for them. If so that might be good for your conversations when you conversations with your clients. And also, sorry, as per any loan, criteria applies for both of these features. All right, so let's jump into the fees. So the fees at Heartland, our fees are very transparent, and they can be found in our fee schedule on our website. So I recommend all you brokers jump on our website and look at our fee schedule. We do not hide any of our fees. They are out there. We're very transparent. So we offer a fixed amount and flat fee. We don't charge a percentage on the loan proceeds. It's just a one-off settlement fee of $495. And then we have a standard valuation fee, which will usually be waived if the loan settles when the property value is under $2 million. In the case where the property is over $2 million, we'll be happy to waive $350 of the cost. We also require no regular valuations throughout the loan throughout the lifetime of the loan. It's just that the one on settlement. Unless you're going to be taking out a further advance, then we may require we would require a valuation to be done as a new assessment will be carried out. And more importantly, there are no ongoing fees. So all those fees are settled at settlement, and we're done from there. All right, so let's move on to the scenarios. Hopefully assist with your understanding a bit better. So for this scenario, we have a single borrower of 93 years old. They have an unencumbered home of $2.5 million, and will be seeking a loan of 1.125. A lot of this would be going into their facility. So we have a regular advance of $630,000 for home care costs, as the borrower has a health condition which requires very expensive home care. So he's setting up a regular advance for home care costs of $15,000 per month over a period of 3.5 years, and also a cash reserve of $435,000 for any unexpected costs. Also, of course, the $60,000 initial advance for immediate care costs. So here, like I said, he has a health condition which requires expensive home care. But he has some investment assets which he would previously liquidate to pay for this care, but because of COVID-19, his income is actually reduced. It's put some pressure on his assets, and he basically needed an alternative means to finance his home care throughout this period. So we look at the loan features that are utilized in this scenario. So we were able to lend based on the borrower's age and value in their home. And we provided necessary funds of over $1 million to assist with the medical care needs, the home care costs, and of course have a cash reserve for peace of mind. So the loan features we have here is that we had no maximum loan amount, so they were able to access a loan of over $1 million. It will be the case that any other reverse mortgage provider in the market would not be able to offer that amount. Without no maximum loan amount, possibly we'll be happy to assist here. For a regular advance facility, so we set one of these up with a fixed term of 3.5 years. So that was to assist the client's needs. He wants it to be a fixed term of 3.5 years. We're able to do that for him, and this is to cover medical expenses without liquidating the assets that are currently in the volatile market because of COVID-19. He had a financial advisor which advised him on this. He believed that the market would stabilize after a period of 3.5 years. So we were happy to assist there. And with the cash reserve facility, we set this up for unexpected circumstances that may occur, especially considering his health condition. It really just provides the customer with some peace of mind. And of course, no interest is charged until those funds have been drawn. And the drawings can also be made any time for the life of the loan. As I said, we're not going to limit the duration of access and interest. And the interest added does not limit further access, as I mentioned earlier. Okay, going on to the second scenario. So this one, we have a single borrower of 76 years old. It's a property value of $370,000, and the location is at Old Beach, Tasmania. He'll be seeking a loan of $57,000. I believe the LVR is around 15% here, and that's important because think about it, the 76-year-old can, for a standard LVR, be able to take up 31%. But for this loan, he only wants to take about 15%. He wants an initial advance of $37,000. It's to refinance the loan or home improvements, and $20,000 for a cash reserve for any unexpected costs. The important thing here is that it's in a rural location, which is just outside of Greater Hobart, which is considered an orange location. Usually for orange locations, we would apply some scaling. And the borrower chose to apply for a 50% equity protection option. So he wanted to protect at least half of the of the value of his home when it came time to repay the loan. So half the sale proceeds. So the loan features that we utilized here. So the security location, the postcode was located in rural Tasmania, but on review from our team, we noted that this location had strong sales activity, and also after the valuation came back, we noticed it was actually very strong. So this gave the credit teams additional comfort, and they were able to basically look at this loan using a risk-based approach, as I mentioned earlier. So because of the fact that, you know, it was only a 15% LVR, despite the fact that he could take up to 31%, I believe it was, we're able to use that risk-based approach, and therefore we didn't apply any scaling or reduction to the maximum loan amount provided. And that's why it's important. If you guys get orange and red postcodes, don't let it deter you. Just have a conversation with myself, and you know, I'll have a chat with credit, and we'll see how we can if we can proceed. But also the borrower put through an equity protection option. He wanted peace of mind, and he applied that to the borrower's loan. The equity protection option was applied to the borrower's loan, and it gave comfort to the borrower that he knew that he'll have 50% of the net sale proceeds when it came time to repay the loan. So that's really that's it for this one. I will now jump over to the questions. I'll give you guys a minute. If you guys want to ask some questions, feel free to. Otherwise, we'll close this off. Cool. So I've just got a question here asking, is there still a fee of $60 for a cash reserve drawdown? That's true. There is a $60 fee for cash reserve drawdown, also for the redraw as well. A question here, can a client use reverse mortgage loan to move into a retirement village? For retirement village, we usually do not take security over a property with property that is within a retirement village. However, we can consider on a case-by-case basis for a over 55s unit, assuming that it has strata title. So I'm about to meet with an 85-year-old who wants to pay out a Westpac loan. Due to his age, how would this transition into moving into an aged care facility? So, so we can, so for an 85-year-old, basically, if he is going to be moving into the aged care facility at the time of settlement, then we can set up an aged care loan. If he plans to move it into the future, we can set up a Heartland reverse mortgage, standard reverse mortgage today. And then later down the track, we can adjust the loan into an aged care loan. I hope that answers your question. Hi, Lester. He's asked if these slides will be available. Yep, I will. I think next week I'll be sending I'll send the slides out. I'll also send a link to the YouTube. We'll set this on the YouTube link on YouTube, and yeah, I'll make sure I send it out to all brokers that have attended today. Hi, Mike. You just asked what are the features of the aged care loan. So the aged care loan only differs from our standard reverse mortgage. mainly around the fact that we allow an additional 5% to our standard LVR, and also, of course, there is a 5-year loan term, but it can be used for, aged care purposes, but it can also be used for any other loan purposes that could be used for a standard reverse mortgage. But those are really the two differences, is really the LVR and also the fixed term. I'll just give you another minute, and guys have any other questions, and then we'll just close this off. Okay, that looks like looks like it's everything. Here's just our contact. So, but anyway, thank you for all listening today. I hope we all had something to take away from this webinar, and hope that it assists you with your customers when you're looking to meet their individual needs. As I've shown, Heartland has a very flexible reverse mortgage product that can be tailored to suit the customer's individual circumstances. So if you guys have any other further questions or general inquiries, feel free to give me a call or send me an email. This is all the contact details here. I will be happy to help. So thank you, everyone, and enjoy your day. Cheers.